Hey guys, today's episode is all about corporate VC. I interview Tamara Steffens, who works at M12, which is Microsoft's corporate venture arm. We talk about what corporate VCs are looking for, the best ways to approach them and pitch them, some of the advantages and disadvantages of raising money from a strategic investor like Microsoft. If you like this topic, hit that subscribe button, leave a nice comment, and then email us at info@foundersuite.com, and I will send you a list of the 500 most active corporate venture firms. So hit the subscribe button, leave us a comment, and then email us, info@foundersuite.com. This is a really valuable list of very active strategic and corporate VCs. Until then, sit back, enjoy the show.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Tamara Steffens of M12, Microsoft's venture arm, coming to us from Dallas. How's your day going?
Great. So far, so good. Lots of sunshine, as you can see, and still working at home. So making that work.
Good. Right before this call, the tornado sirens went off, but I guess that was just a testing system. There are no tornadoes bearing down on you at the moment.
Yeah, based on the weather behind me, no tornadoes. But yeah, I think they have to practice that a lot here in Texas because it's not uncommon to have a tornado.
Because you've been through one. You mentioned your house was torn apart.
I did. Yeah, it was, I guess, one of the worst tornadoes in 50 years. I think they said it did $5 billion of damage in 5 minutes or something crazy. And I guess I won the lottery because it went right through my house.
That's crazy. Now, were you home at the time, or where were you when this was happening?
I was home at the time. I was in the closet. I was not able to grab my cats fast enough, but they survived. They got under something, and as soon as I realized it was gone, I went searching for them. And then we went to the other part of the house, which was left standing, but there were so many trees and everything down. We had to wait until the next day to even be able to get out, have them come literally cut trees to get us out the front door. So it's all good now. The neighborhood is rebuilt, but it took a year and a half, and hopefully that means that a tornado won't take that same path again.
What are the odds, right? Yeah. Hopefully that means you've got that out of your belt. All right.
Exactly. Check that box.
Check the box. Good. What do you do at well, first of all, what is M12 and what do you do there?
Yeah, M12 is Microsoft's venture fund. It started about 5 years ago. For those people who are not aware, we actually never had a true venture fund at Microsoft. Peggy Johnson, when she was here, had come over from Qualcomm and wanted to model an investment fund that would bring signal back into Microsoft and be able to make some of those early stage investments. So she started Microsoft Ventures. They renamed it just so people understand it's differentiated from the broader Microsoft, although we are under the broader Microsoft umbrella. We are relatively independent in how we make our investments. I run the North American and India investments. My team does that, as well as our, kind of go to market development for the portfolio companies that we invest in. Like I said, fund is about 5 years old. We invest roughly, you can kind of figure out based on the size of the investments, 200 to 250 million a year. We set aside some for growth, some for seed, and the rest is in our core fund.
Interesting. So the fund is a dedicated fund, or it's investing off Microsoft's balance sheet, or what?
It's both. We don't have any other LPs except Microsoft, so technically we're investing off of Microsoft's balance sheet, but it is dedicated to Microsoft Ventures.
Got it. And okay. And how large is the fund, or is it literally called down as you're finding new deals? Yeah.
Well, so we do a vintage fund. So every year we refresh the fund for that vintage. So it is, like I said, it's off the balance sheet, and roughly in the last couple of years, it's been 2 to 250 ballpark range of what we've invested, a little bit less one year, a little bit more the next. But that's the ballpark size of it. Again, it's every year we refresh it and make new investments. It includes our pro rata, because we like to, we're very, in the early stages, we did a lot of Series B, C, even a little later stage. And that was the first couple years of the fund. The last couple years of the fund, we've really focused on Series A and even a little more seed. Getting in early, leading. We try to lead a lot of investments. We like to have a solid percentage of the investment. And so we're trying to do earlier stage, take more of an ownership, get a board seat, and really be involved in the growth of the company. So while we are a corporate venture fund that's financially focused, so we wouldn't consider ourselves a strategic fund, we do try to align with the broader strategy of Microsoft, right? Because you can take anyone's money. There's plenty of money out there, a lot of great venture funds. If you, we think if you take M12's money, we better be able to help you, right? And the best way we can help is to make sure that we get the muscle of Microsoft behind the startups that we're investing in.
So I want to come back to that, sort of the value of taking corporate venture, but just going back to sort of your investment thesis a little bit, $250 million invested a year. So over how many deals is that? And I guess we're kind of backing into like average deal size, or because it sounds like you're spread across multiple stage categories. So maybe give a lay of the land there.
Yeah, I would say now we definitely are doing more Series A, a little bit of Series B, and some seed. We're not, and we'll do pro rata on B, C, D. I mean, we'll still invest, but it will be after our initial investment. I think the number of deals we've done to date is over 90. I need to go back and look. I think it's 95 plus deals since the beginning of the fund. I think we've had more than 10 exits. So, again, in the beginning, first 2 years of the fund, we put in, our check size was a little smaller. Now our check size is 2 to 10 million, but we've done check sizes of 20 million. So it kind of depends on the tech and what they need and what stage they're at. But if it aligns with a way we can help them, meaning if it's technology and a startup where Microsoft can use its muscle to help them grow, we'll take a look, because that's our best investment, right? That's how we can ensure our value as a venture fund. How can we help that startup get to the next level?
And so let's talk about that. So, I'm a startup. I'm, talking to probably you guys and some traditional VCs, non-corporates. Really, here's your sales pitch moment. What can I really get from partnering with Microsoft or M12 that, I really couldn't get from a regular VC? What is Microsoft really going to do for me?
Well, I mean, we have the largest enterprise sales force in the world. So if you're selling B2B and you want a direct access to some of the largest companies on the planet that do business with Microsoft, our hope would be that we could get you there. We don't promise that, but I would say if you talk to a lot of our portfolio companies and those founders, they would tell you the value of doing business with M12 and the growth that we've been able to help them with has been significant. So I would say in most cases, our portfolio companies have benefited from that go-to-market sale. And the other thing is, we obviously have a huge engineering team as well. So if we can help in building a strategy or help with that strategy, or give some engineering talent around our cloud storage, Azure, building on Office 365, building on Dynamics, and in that vein, our sales guys then can go to market with you. We will do that as well. So both from a selling perspective and an engineering perspective, I think we have a lot to offer that's pretty unique that a traditional venture fund cannot offer.
Yeah, it makes sense. All right. What are you guys looking at? Microsoft obviously has its hands in enterprise, in Office 365 and video games, everything. What kind of deals are you guys looking at? Do you have a thesis or multiple theses? Weird word, but give me a flavor on that.
Yeah, we definitely definitely have multiple theses, but I would say the broad overwhelming thesis is really B2B, right? And SaaS. So if it's an enterprise play, B2B SaaS, it could definitely be a good fit for us. I look at, excuse me, cybersecurity. We did some stuff in quantum computing. We've done robotics. We've done health sciences. Those are areas where Microsoft has expertise and an ability to help. So think B2B, but also some deep tech. We haven't done much in consumer. That doesn't mean we won't ever do it. We just, as a fund, a 5-year-old fund so far, we haven't leaned in too heavily on consumer. And then we haven't done anything in gaming. Fingers crossed. I hope we do eventually. I'm a big fan of the gaming sector, so I keep looking, but we haven't jumped into that just yet. So B2B, SaaS, cybersecurity, some deep tech.
Interesting. Got it. And I gave you your moment to do the sort of plug or sales pitch for taking corporate VC or M12's money, but what risks or caveats would you give, taking a dispassionate view of this, right? What would you say are the potential downsides or challenges of taking corporate venture, exit optionality, things like that? What do you think?
Yeah, we don't do that. Like I really, I feel good that we have founder friendly terms. So we don't put clauses in our investments. That's, and it really depends on the startup and the software company. There are good corporate venture funds that are strategic, right? And can really help drive that growth as well. So it kind of depends on that strategy and what you're looking for. Sometimes strategic funds have a I don't want to say a bad rep, but they're looked at as if the internal organization which decides on making that investment no longer is interested in that tech or isn't paying attention, you're not generally going to get follow-on investment, et cetera. We try to do it where we're founder friendly. We are aligned with Microsoft. We want to make sure we're investing in things where Microsoft can really help the growth, but we also want to be committed to, provided the companies are doing well, we want to be committed to the founders, to the pro rata, so that we can invest in future rounds, and that we stay with that company for their term, right? Until they can sell or go public. We'd love to start and exit with them in a positive way.
You mentioned that it's not as much, it's a financial focused fund, not so much strategic, but I guess, can you really discouple it from strategic? Or isn't that the point of having a venture arm at a large corporate, is to really support the mothership and the strategic vision, or, you know what I mean?
Yes, it is. But if that's your only focus, right? If you have to align strategically on every single deal, you're probably not going to be out there finding the signal and bringing it back in. You won't get that big pull. So we really do try to stay, super focused on financials, and still, again, don't take my money if I can't help you grow, right? If I can't come in and be a great board member and have some ability to push you to the next level, it's probably not worth your time to take my investment, right? But if I can, a lot of times having Microsoft behind you and in the market is a really great thing, right? Especially with enterprise customers. And we have no approval process, meaning I don't have to turn around and go back into Microsoft and say, hey, I met company ABC. Do you like them? Do they fit with us strategically? Should we invest? That's not part of our process. That doesn't mean we don't take advantage of our incredible engineering talent. When we do diligence and we look at things, we certainly will pull in, smarter people inside of Microsoft to give us an opinion, because we can, and that's a big advantage in our process, because we can go really fast in the diligence process if we can bring in some brains behind us that know a lot about that type of tech or that space. So we do use them for diligence. So we get some concurrence, but it's not required.
Are most startups that get funded building on Microsoft's platform? I mean, I guess the other way to ask that is, if if I'm not building on Microsoft platform, am I even up for consideration, right? Is that, an issue? Yeah.
Yeah, well, I mean, we've done investments where companies have invested, they've built on Salesforce. And of course, once if we win that deal and they take our term sheet, we'll help them. We'd love for them to use our tech, but it's not required. I mean, I'm on a board of a company now that took some original money from Salesforce. We did the Series A. They're doing amazing. They're still on Salesforce, still on AWS. Do I want them to move? Yeah, of course. I want to get Microsoft in there, but it's not required, right? Mm. So we try to make it an offer and easy for them to do. And if it makes sense for that startup to do it because it's going to drive growth for them, then they'll do it. And if it doesn't, they won't. And we don't push it unless they ask us for help, and then we'll throw as much help as we can at it. But so it is a little different. And a lot of, a couple of my companies that I'm on the board of are built really on the Google suite, right? And because they focused more in the SMB mid-market, and so they started on Google. Now we certainly can help them get into the enterprise. So often they'll add that to their product so that they can cover all three. But it's not uncommon for them not to be built on Microsoft to start. And we still think it's a great tech, great product, and we'll bring them in. And often they'll do both, right? They might have started out on something else, and now they'll add the Microsoft tech to it to drive their growth.
I finally upgraded my my Microsoft Office. I needed a new version of Excel, and so I finally upgraded. And this is because I got a new computer, and my last computer was still running Excel 2008. So it's been a 12-year upgrade cycle for me, and I was the notable thing, I mean, it's still Excel, looks nice, a little cleaner, crisper, but now it's a subscription. I thought that was interesting, right? Like I wasn't just purchasing my copy, I'm now purchasing the subscription. So clearly, I don't know where I'm going with this, but clearly kind of a signal. I took it as one little signal of Microsoft's focus on SaaS and, all that, right? So
yeah. And I mean, I think we did that. We made the big move 5-6 years ago to move everything over to subscription and allow different options. We do still give our software away free to university students. So we're still trying to push in the, global ed tech space to get people started on Microsoft. But when you get to the enterprise or at home, we do require you to have a subscription.
Yep. Interesting. How big is the venture team there?
I guess we're right about 30. So we have 10 or 11 people on the investor side. So actual investors, and the rest of our team is what we consider go-to-market. So they either help our portfolio companies sell into Microsoft. So that's always another big area of growth. If you're already talking to Microsoft, selling to them, whether you're cybersecurity or some other sort of tech, we can help you if you want to have Microsoft as a customer. And then the other go-to-market team, our market dev team, helps take them into our customers, our big customers that could potentially use some of our portfolio companies' tech.
Got it. And I noticed on your LinkedIn, you're talking about VC partnerships in North America and India. Maybe talk about is this just a strategic focus of North America and India? Why India? Maybe any color on that?
Yeah. So why India? We actually have a huge research and development team in India. So we've got a lot of resources there. And there's a lot of interesting tech that we started to look at. So we added a partner there, Abhi, and he really looks at tech in that space. But consider it a little bit broader than India. He does look at Southeast Asia, but I would say we lean in more a bit on the Indian market. We've done 2 investments in that space. We only started in India about a year ago, a little over a year ago. We did Farai, which is a transportation delivery tech, really, really cool company. Starting in India, moving into the US market. So it's a really good fit where we can, help them, grow their global footprint. And then we just invested in kind of a design-driven company called Lottie Files. And what they're doing. They're actually out of Malaysia, so it's one of our Southeast Asia investments. But really cool new file format that we think is going to dominate, and these guys have found a way to pull some tech around it and allow people to use this format. So we're really excited about that as well.
Interesting. What are your best tips or nuggets of advice for getting in touch with M12, or I'll phrase it like this, both M12 and corporate venture in general. So you can kind of extract it either specific to M12 or more corporate venture in general, but best tips for getting in touch with you guys, for pitching you guys. I would have guessed before this conversation that I need to tailor my pitch to how it's really strategic to Microsoft. Sounds like from what we've talked about so far, that's not so important. So I guess I'll just open up the question. What are your sort of best tips for kind of getting in touch with you guys and pitching you guys?
Yeah, well, you feel free to give out my email address. I'm happy to take any provided they have a great SaaS product that they think Microsoft could help them grow, and they're looking for seed or Series A. I'd love to hear from them. That's one. Two, I would say pitch to me like you're pitching to somebody else, right? Because we're really okay leading the round. That's our preference, but we're happy to be part of a syndicate as well. We like to have a certain percentage. We like to have a board seat. My advice to any founder when they're pulling together their pitch is, the one key thing is, I say you have to know what your total addressable market is, but don't make your total addressable market some Gartner number divided by some percentage they think they can get with their product. Like, really tell me from the bottom up, I have 4 customers. I have 40 customers. These are my customers. This is how much they're spending with us. This is where we think the product is going and what the range of pricing we're going to get on a per seat basis, on a per server basis, whatever that is, and really extract out what that reasonable forecast is. I think that's, like, when somebody comes to me and has really thought about it, 90% of the time, they're not right? They're not right, that, they're so early stage, we'll figure it out as we go. But the thought process of knowing how you're pricing it and how it really is going to hit the market, and using some real examples of what you've already done, even if it's just a couple of key sales, that's huge, because that makes perfect sense. Versus the total addressable market based on Gartner is this, and we're going to get 10% of it.
Yeah.
I don't know how. Nobody knows that that's going to happen.
And okay, so that makes sense. So go bottom up. Other just considerations, like if I'm a startup kind of wanting to get into Microsoft's ecosystem, anything I should make sure I have in there other than the bottoms up, Yeah.
I mean, it certainly does not hurt if you've already thought about building on Microsoft, or you've looked at our enterprise products, or our CRM products, or our artificial intelligence products, and you're using any of our technology. That certainly helps. It does not matter. So if you are using other tech, but you think Microsoft is a huge area of growth, tell me how. Like, what can I do for you? Because I want to be able to say, here's my term sheet, and I'm sure I can help you, right? I want to make sure that that's part of the, the package, right? Is that this is how we think we can drive your growth. And it isn't always because you're already built on Microsoft or you already are using our tech. It's often because you want to get into the enterprise, you want to get into the Fortune 1000, Microsoft can help you get there, and you have this idea about what we can do to help each other.
Yeah, that's good. So you're typically, I think you mentioned, you like to lead when you can. You like to take a board seat. Do you have sort of target ownership percent when you do a deal? I know that's going to vary a lot, but
yeah, we say minimum 5%, but we'd love to have more than that. That's why we're willing to write bigger checks. And some tech we just want to be a part of, right? So we have to think and make a decision if we would take less. But generally speaking, we shoot for 5 to 10 in that range. We like to be in that range, and we will take more if we can get it, depending on the company. And it's okay. If a company does really well, often we'll try to jump in and do super pro rata on the next round, or potentially if we didn't lead, but we were part of a syndicate in the first round, we might try to push and lead the B. We've done that before as well.
So this is always a loaded question. You don't have to, the question kind of sounds like, what are your favorite deals? But what are some interesting recent deals that maybe you can talk about that you guys did? It doesn't, so it's not signaling these are your favorite. That's like picking your favorite kid. But like, what are some interesting deals that maybe have just been notable recently? Yeah.
Yeah. I mean, I should say all the ones I'm on the board of, right? Because then, otherwise my founders would be upset with me.
Yeah.
I didn't actually do this deal. I did the follow-on round. It's a company called Schedulo. They're Australian and San Francisco based, so they have kind of dual offices, but their technology, think of it as kind of a workforce front end, right? So it's all mobile based. They reorganize the way your field workers go to work, and they did a lot of healthcare based deals in the beginning, right when they got going. And they have just exploded with this pandemic, unfortunately, but they've been doing COVID testing and COVID vaccinations because they're able to do, hundreds of thousands of appointments in their system, and they're already set up for front end workers, right, to be able to take those appointments and service those either tests or vaccinations. So they just won the state of California. Governor Newsom got out and said, hey, this is, some of the best tech we've seen. We're super excited about them managing vaccines for California. So that was a company that we would have never guessed that their technology could be applied to vaccinations, because we didn't know that was going to come up when we invested. But it's just an example of a company that has really solid tech that can do a function, and that function can be flexible based on what they needed. In this case, it was front end workforce tech. Yeah. Another company that really took off during the pandemic, but was always great, and really they just did their C round, was a company called PandaDoc. Really beautifully designed Salesforce kind of sales proposal flow, if you will, workflow, but with full digital signature processing and workflow. And so they're really, the way they've designed it is just fantastic. It's just so much easier to use than, say, older tech like DocuSign. Not that DocuSign's not great, we use it, but it's just fantastic. And they just took off because everybody's signing everything digitally, and companies have learned to do things completely digitally. So their tech and the way they've designed it, ease of use, really just took off. So those are probably two of the favorite in my portfolio. And then the one we just recently invested in, Lottie Files, just that new design element and the way they're the tech so that people can use those Lottie files in design, I think is going to be really great long term. And that's an early stage deal for us, but I'm super excited about what they're doing.
That's called Lottie file?
Yeah, Lottie.
Oh.
Lottie Files. And they're out of Malaysia, but really they're global already.
Interesting. Cool. Check it out. Let's talk a little bit about just how you got to be the GM and MD at M12. Tell us a little bit about your background getting to corporate venture, and maybe any kind of lessons learned of raising money. I know you've been involved in some IPOs for previous companies. Any just lessons learned or interesting stories, war stories, tales from the trenches of some of your previous businesses? That's a big question, but take
that would take way too many hours. Well, I did, before I got to Microsoft, I had done 6 startups. My last startup was actually called Acompli, which was an email company. It's now Outlook Mobile, for those of you who use Outlook on your phone. We were small, 11 people, I think, when we actually did the acquisition. So funded by Redpoint. And, we sold we were around for not much over a year, I guess. And, I would say I was addicted to startups, right? As soon as I could, was offered to join one. My first one was software.com, a guy by the name of John McFarlane, who was the CEO. what was also an email company. So my first startup was an email company. My last startup was an email company. I like to sandwich everything else in the middle. But interesting. And John obviously went on and started Sonos, which is super cool. Wireless speaker and wireless pack audio. He's an audiophile. So repeat successful entrepreneur. I love being on the venture side now because I was an operator at 6 different companies. I ran sales, I ran field engineering. I've done basically COO type functions. I've raised a ton of rounds for various companies. I've recapped companies. I've gotten seed funding. I've done convertible notes. And so I've seen it all, and good and bad, right? From 2000, 2008, some really down times, some really up times. And I think it's interesting sitting on the other side of the table and talking to founders and listening to their strategy and where they're going to go and how they're going to get there. Because I feel like I have been doing it for so long. It's great to sit on the other side of the table. And I love being on boards. I think that was the one thing that attracted me to come over to M12, was to be able to be on boards and help founders, move their companies forward. I spent my first 5 years at Microsoft after the company got acquired doing business development on the productivity side. So all of the Office 365 stuff, all of the mobile stuff we did with Apple, Samsung, Google, a lot of our preload deals, a lot of the operator deals with, Verizon and AT&T. So I did biz dev for quite a long time. My team did before I came to M12. I'm relatively new on the venture side, about a year and a half. So I'm the operator in the group, and I lean on the other venture brainiacs for some of their financial wizardry as we pull these things together.
Sure. Good. One of my favorite questions: what tips would you give your younger self, or even just other entrepreneurs coming up? If you could go back and advise your younger self about raising capital and growing businesses. Also a broad question, but any just tips or tactics you would kind of advise people on, or advice that you give to some of the companies you're on the board of now, anything we haven't really covered?
Yeah. Don't wait too long. I have a few. Don't wait too long to raise money, because you don't want to be in a situation where you have to take something you don't want. Mm-hmm. Don't negotiate against yourself. If I ask you, what are you expecting in this round? What do you think the valuation is going to be? Don't answer me in that way. You can give me a range. That's not negotiating against yourself. You can tell me what your last post was. You can tell me what your current ARR is. I can come up with a price that I'm willing to pay and price the round. You should take the best offer that's going to get you the growth you want and the price you want. But don't obsess over the price, because in an A round or even a B round, it's not that important, give or take that 10%, right? Take the money from the best possible fund, from the best possible investor that's going to help you grow, that is going to be a great board member and a great addition to your company, because that's way more important. Now, when you talk C and D, pricing starts to matter more later stage a little bit, but don't get too caught up in the price. Don't wait too long. Don't negotiate against yourself.
Just touch on valuation for a minute, because this is just one of these questions that entrepreneurs always struggle with. I get asked all the time. I'm sitting there. We've had a great pitch meeting, and you asked me maybe what is our expected valuation, or I guess how do I answer that question? Do I just pick a number out of the air and say, this is what we're aiming for? Like you said, do I give a range? No. How do you answer the question of what is your valuation or price, right?
If you did a seed round, you know what your post is. If you did an A round, you know what your post is. You can say, we raised in February of 2019 and our post was 27 million. Our last year's ARR was 5.5. If I want to give a range, I can give a range there, or I would say, at the moment, we're talking to a number of venture funds. Our process we're anticipating will last between, 2 and 3 months at the most. We want to be done by the end of March, and we're going to let the market price it. I can say it that way, or I can say the anticipated range based on feedback I've gotten from other venture funds is X. Or I can say, I've gotten a couple of term sheets. If I have those term sheets and I want to share what those term sheets are because I think they're fair, but I may want Microsoft or some other fund to invest or to give me a term sheet, I can say, I have a term sheet. It's pre 100 million pre, and here's how we're looking at it. I like this term sheet, but I am going to consider other offers, right? So I think there's a number of ways to do it where you're not negotiating against yourself and you're still getting a fair market price, as well as, moving the process forward.
Yeah, that's interesting. So kind of, if I'm paraphrasing a bit, maybe either giving a range or general ballpark or expectations, but then pushing it a little bit back onto you, the VC, to throw out a price, right?
Well, because I mean, first of all, there's a lot of money in the market today, and if you've got a solid story and a good product, and you know what you're doing, even if you're a seed, people are going to give you a term sheet in a range that they think is fair, right? And most likely in today's market, you're going to be able to get more than one. So hang tight and don't price yourself out, because I definitely went into a round. I won't say what company, but we had a range, and it really wasn't a range. We had a number that we wanted, and when they asked, we gave the number. And I regret that, because a year or two later, I remember asking the lead person, I won't say a name because you would know. I said, what, I really thought you guys were super interested in this company, and you didn't even, you came and they did come and meet with us one more time, but they didn't make an offer. And they said, well, we didn't want to insult you because we would have been about 50 million lower than what you guys wanted. And we thought if we positioned that, you guys wouldn't be interested at all. And I was just like, oh, because I think they would have been the best investor. I think they would have been the best venture fund for us. We still got funded. It all worked out, but it took us a little bit longer than we wanted. I don't think it was the most ideal partner in funding. It worked out, but that other venture fund would have been a better fit for us. And we priced ourselves out of the market accidentally, just not really thinking through what we should have given a range, or we should have said, you know what, we really think you guys we should price this, our last round went at this. We really would love for you guys to participate. I think we were a little nervous and came in with a number and gave a pitch and screwed up.
This might be a little counter-serving to your purposes, but when you're negotiating with entrepreneurs, do you recommend that they tell you and VCs like you, the other venture funds they're talking to, that they're getting term sheets for, or do you think they should kind of hold those cards closer to the vest? I know this is maybe advice that, but what do you think?
Yeah, I mean, usually people will tell you. I think it, I don't think it hurts you, right? I don't think if I've got 3 venture funds that are all in my data room, first of all, if you're going to give me access to it, I'm going to see that, and I'm not going to know who, but I think it's okay. I mean, it's only going to make me move faster. So if you've already got term sheets, I've got a limited time anyway, right? And so I got a term sheet yesterday. It's got an expiration of 14 days on it. So if you guys want in, you'll have to let me know if you guys are going to play. That's fair. Okay,
we're almost done here. Do you see founders using that tactic, almost, I don't know what the right word is, not maliciously, but kind of as a gimmick to get you to move faster? And or a corollary to this question, what's the thing that drives you crazy the most with founders that they do and in the whole pitch negotiation dance? Anything to not do?
Well, this is it's just me, because by the way, the other investors at M12 don't feel as strongly as I feel about this. I'm not a big fan of secondary. So if founders come in and say, we're trying to raise $20 million and 10 million of it is secondary,
Define
I'm like,
that.
what? And I'm like,
Can you just define what you mean by secondary?
Where founders want to take some of their equity off the table. So
Got
they
it.
want that to be part of the round. So maybe I'm going to raise 15 million and I want to do 5 million in secondary. Or they'll say, we're going to raise 15 million, but we can add an additional 5 million in secondary. That always makes me nervous because I'm always like, well, if this company is so great, why are you guys trying to get out of, why are you trying to take money off the table? That said, after I'm already invested in a company and I'm on the board and I see that they're successful and they've been out there for 5 or 6 years, I'm fine with founders when they do a Series C, Series D, and they're 5 or 6 year old firm. I'm like that, fine. Take a few million off the table, that's fine. But when they come to the table and they let me know right away, you could do the secondary part of this, or the last question, do you guys have a problem doing secondary? I'm always like, okay, well, I don't have a problem doing it, but why? Why are you taking money off the table now if this company is going to do so great? Why are you worried about taking money off? I don't know. I mean, and you know what? It's a little bit of history because in all the time that, I was at different startups, we never did that, right? And anytime we raised, we never went out to market. We never sold, shares, independently for employees or took secondary. We just didn't do that. So I might be a little old school when it comes to that, and I'm open to it now. So I don't want to sound like don't come to me if I won't do it, because I've learned that that's more common now than it was before.
Got it. Good. All right. Well, I won't keep you. Any last words of advice or tips, or if people want to learn more about M12, what's the website they should go to?
M12.vc. And my email address is just Tamara, Tamara, at M12.vc. So reach out to me directly. I'm at Tamara Steffens on Twitter, and you can, ping me on LinkedIn. And yeah, any great B2B startups that could benefit from having a relationship with Microsoft, I'd love to hear from you.
Awesome. Well, great, Tamara. This has been fun. Lots of good stuff here. Avoid those tornadoes. Hopefully there's nothing coming your way. Fingers
no more
crossed.
Tornadoes.
And good luck. I'll keep an eye out for startups to send your way. Thank you so much.
Thank you so much.
All right.
Talk to you soon.
Bye.
Bye.